The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and I'm glad to have you on and listening. So if you have any questions, feel free to give me a call. You can reach me at 877-927-6648. Again, that's 877-927-6648. And looking at where the market's at right now, we got the S&P down 1.5. We have the Nasdaq down 14. We got the Dow up 4. And we have the Russell up 3.4 with gold flat on the day. Looking over at copper, it is up 0.5%. We got silver is basically flat right now. We got corn up 7 points. We got soybeans up 18 points. Both of the ags there up over 1% on the day. And looking at euro dollar, it's up 86 pips. Pound dollar up 61, and Aussie dollar up 45. The dollar showing weakness across the board on those pairs, but of course the dollar showing strength on U.S. yen, down 30 pips, and U.S. franc down 65 pips on the day right now. Looking on over at U.S. Canadian, it is up 5. So dollar showing strength except for against U.S. yen and the U.S. franc. And looking on over at a few other things, just checking them out and seeing how things are going. We want to go ahead and always look at our fundamentals. When you're looking at your fundamentals, it's always important to note that you're looking at when will the market move, not what should the market do, okay? So always make sure you're looking at when will the market move, and that's what the fundamental reports are about, so you can know when trading possibilities are popping on up. And last night we had the euro dollar strengthened here. We got a few things going on, but we got the German flash manufacturing PMI came in worse than expected, but their flash services came in better. In addition, we had a few other reports. The French flash came in, the flash manufacturing PMI came in worse, and also the flash services came in better than expected. Looking on over for today here in the United States, we had the core CPI released and came in worse than expected. They thought it'd be 0.2, and it was at 0.1%. So it climbed up to 0.2 last month when they thought it'd be at 0.1, and that's where it's been for many months. And so they went ahead and raised the forecast up to 0.2, but then it dropped on back down to 0.1. And it's been with 3 out of the last 5 months down there, and it's fluctuating between 0.1 and 0.2. And what is CPI? That's the change in the price of goods sold to people, and so basically that, and also it includes like food and energy. So it's really your inflationary number. I always find it interesting that they leave out food and energy. They say, well, they don't control that; different things control that, so they don't include that. But of course, as a consumer, you feel food and energy more than you do anything else, because that's what you spend out of your pocket on a consistent basis for fuel, electricity for your house, and of course food to consume, being the number one most important factor in most people's lives on inflation, is the one number they leave out. Anyways, checking things out and looking across the world, we got all that up there now, and so now let's go ahead and check out what we got coming up. We had a couple other numbers come out of the United States today, but basically all the news reports are already out. And looking on over, we don't have any international things happening on Saturday that are scheduled. Over on Sunday, we do have the yen. They're going to be releasing the lower house elections. So the elections are coming out, and the voters are going to elect 480 members to the Japanese lower house of the parliament. And that from that, a government is formed. And so you can get information on that if you want to. You can hop on over. It's sort of an interesting website, but it's the diet is what we call it, the source, and it's Shugin, SHUGIN.go.jp. Again, SHUGIN.go.jp, and I'm sure it's not pronounced Shugin. I'm not sure how you say it, but anyway, so that at least gives you the domain name. If you want to check that out, you can look at the live results as they get posted over there on who gets elected for what, and that's basically all we're going to have coming out Sunday. Rolling on over into Monday morning. And by the way, those numbers come out, those election results will be coming out throughout the day. It won't happen all at one time. Looking at over, let's see, we got the New Zealand dollar. We're going to have a 7 o'clock trade on Monday the 17th. The New Zealand dollar, 7 o'clock, they have their business confidence report. If you're an Aussie dollar trader, you're going to have your 7:30 usual Aussie dollar trades. And they're going to be having their monetary policy meeting minutes. So basically, why did they, do what they did on the last one, and what insight does that give to their next interest rate decision. And again, that'll come out at 7:30 on Monday for Aussie dollars, so giving you a Sunday evening trade there. And then rolling on over to Tuesday, we're going to have the CPI for Britain come out at 4:30, so that'll be a big number. And, if the more off it is from expectations, the bigger that number is. Usually they're pretty close, so it's usually not a massive move on it, but you can easily expect a 20 or 30 pip move off of the CPI number for the pound. And then at some time, there is no scheduled time, the Bank of England will release their inflation letter. And that inflation letter is basically, it's tentative because the letter is only issued if the earlier CPI year over year is above 3% or below 1. So if it's not above or below 1, they'll remove it from the calendar and they won't release it at all. So you don't really have, it has a big impact on the pound if it's released. That's pretty much all you got there. And then New Zealand dollar 4.45. So pretty quiet days on Monday and Tuesday. And then it'll pick up a little bit later in the week. We'll have the IFO business climate from Germany coming out. That'll affect the euro dollar on Wednesday, 4 a.m. And then the pound has their monetary policy meeting minutes being released out. And that'll come out at 4:30 a.m. Eastern time. With building permits here in the U.S., finally getting a U.S. announcement, 8:30 a.m. Eastern time. And building permits, basically any kind of building announcements, are usually very good for affecting copper. So you can check that one out. And then scrolling on over, we got GDP. And that'll be happening out of New Zealand dollar. And you'll go into the yen. They have a couple other details coming out. There's no set time yet on the policy statement or the overnight interest rate. They'll be releasing that next Wednesday. But expect some big moves in the yen next week based on the election results. And then they'll have Japan will have a big press conference on Thursday. We'll roll into retail sales in Britain at 4:30 a.m. And then we'll have the core retail sales coming out of Canada. Will come out at, 8:30 a.m. on Thursday, along with unemployment claims on Thursday, and then existing home sales. Again, the great copper trades around the existing home sales, new home sales more than anything, because that's when they're building them. But building permits and new home sales do affect copper. And then Philly Fed Manufacturing Index be one of the larger reports of the week, coming out at 10 a.m. on Thursday. And basically, it's just an index where they survey a bunch of managers in Philadelphia and ask them about what they think about the economic health, the future activity, their hiring, their spending, things like that. And then we'll wrap up on Friday with a current account. And in Britain on 4:30, public sector net borrowing at 4:30 from Britain. So pound dollar trades on Friday morning. And then we'll go into core CPI and GDP and CPI, all happening at 8:30 a.m. On Friday. And then the one last trade you'll have the chance for is the core durable good orders at 8:30 a.m. Eastern time on Friday, right here in the United States, which will affect the markets. That's usually a pretty good market mover, depending upon how off it is from expectations. And they've been off quite a bit lately. So actually, they haven't hit a single forecasted number for the last 6 months. So that usually can be a good trade to find, where they basically miss the mark. And whenever they miss the mark, that's when news really tends to have a big impact on the market. And so all in all, next week, we're looking at a pretty quiet week on the news. So, of course, we know the one big thing that's going to be in impact is going to be the fiscal cliff, and the time bomb is ticking. We got a few days left for there to be any possible chance of having that actually come through and get resolved, and we don't really expect it to come through and get resolved. But looks like taxes are going up. We're going over the fiscal cliff, and I see little to nothing that's going to make that be different. And so, just be aware that that is coming in. That means funds may decide to go ahead and sell off and take some profits on their high dividend yielding stocks. Because, you're talking about dividends for, your average income earners, going from, 15 to 45%. So, over, actually maybe a little more than that. But just basically about tripling on their dividend income. That's going to affect retail traders and, really affect everybody. And so, just be aware that that is coming, and that could put a lot of weight on the market. The market has priced it into a certain point, but, as the next few days approach, we won't have that. Now, we usually have the Christmas rally that does come into play, but it'll be interesting to see if we actually do get a Christmas rally based on, everything that's going on. And there'll be, of course, a bunch of holidays and everything with Christmas coming up, and banks will be closed across the world. And so that'll slow down trading. It's a very dangerous time to trade during the week of Christmas, just because so many banks are closed, so many traders are not trading, volume gets sucked out, And so really that whole week leading up to New Year's could be very dangerous. And that's one of the reasons why I like to trade in an area where my risk is defined. You can get some awesome movements, though, because of that low volume, the market can really be pushed around. And so, you can definitely get some great trades on. It's just you want to have a way to not get stopped out, because it can really just whip you. It can whip you out of a trade in seconds. So if we go over and we check out, go to TFNN.com, click on Nadex, and once you've clicked on that, go ahead and click on Create an Account if you haven't done so already. Check this out. This is a great time for you to trade it and check it out and see how it works, and take some of that time this holiday season and limit your risk, or even do a demo account. But you can go from start to funded with as little as $100. And of course, probably want to put more than that in there, but you only have to put $100 in to get a fully functional live account with no platform or data fees or commissions. They only have exchange fees. Like CME has exchange fees, but you're not paying broker commissions, so that's really nice. And then under our products, you can also find a link that says demo account. In about 15 seconds, you can have a demo account. You can check out what these binaries and spreads are all about. Now, once you get that, you're going to probably want some education to go along with it. So hop on over to the TFNN website, and you'll see a link down where there's an up and down arrow. Click on the Diagnostic Box Spread Analyzer. Click on that. You'll get a 2-week trial full of tutorials, the ability to ask me all the questions that you want about the markets, binary spreads, whatever. I have education on Nadex, I have education on the platform, education on spreads, education on binaries. You also get access to my diagnostic deviation levels that I use on a consistent basis, and you get access to the box spread analyzer, which helps you find the best spread in seconds. It's a live feed from the Nadex exchange, and literally only takes a few seconds to help you find the best spread versus spending 30 to 40 minutes trying to find your spread. And why is that important? Well, once you're doing a trade, you don't have time to sit there and try to figure out which spread is the one you want to buy or sell. You need to execute. And so if you get a buy or a sell signal, it's time to move. And so if you go on over there, then you can hop in and you can pull up the indices and you go, you know what, I want to buy the S&P 500. You just click on buy, say, I want to be able to have the potential to make at least $2 for $1 at risk, and it'll actually show you the spreads that are there. Without it, you're going to be looking at as many as 26 spreads that you're trying to figure out. So if you look at the long and the short side, so just by clicking on buy, then you just narrowed it down quite a bit, and then by clicking on US 500. And then shrinking that down to just a 2-to-1 reward to risk ratio. And now what you found is you instantly have the ability to, there's only 4 spreads out there right now, and you can find the one that's going to work best for your trade. And again, makes it very, very simple, very easy. You could also, if you want to go short, you just hit sell and do that. And if you want to hedge, maybe you're a futures or forex trader and you want to hedge your trades. Well, that's really simple to do. We actually bring in the hedge calculation of distance to break even and risk, meaning I go in and I buy an S&P and I sell a spread. And like on this instance right here, it only has to move basically half a point, and you're only risking $85, but you're getting a massive $350 stop loss for only $85. So a very cool way to trade them. And anyway, so hop on over, check that out, and stay tuned. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, we're on back here. And going on to the Diagnostic Trading Hour. So what we're doing is checking it out. And if you have any questions, by the way, again, you can give me a call right here at TFNN. The number is at TFNN.com at the bottom there at 877-927-6648. And we were just talking about how to use the spread scanner. Makes it really easy. Also, you can use the deviation levels and makes life real easy for you figuring out basically how far you should expect the market to move. If you've been trading for any time, you've probably heard about pivot levels and things like that, or standard deviation. However, the problem with those is they're based on past information. This is based on the market's expectations. We actually take the implied volatility out of the options. Well, what does implied volatility mean? Implied means expected, volatility means movement. So how far does the market expect the market to move based on the options prices, like the options for gold or options for silver or oil or natural gas or corn or euro dollar or the S&P 500? We take that implied volatility, then we tie it into a deviation formula, and a one deviation is basically at 68% of all expected move. You really shouldn't expect the market to move outside of those times, basically more than 70% of the time. And so you'll be able to see how it's very, very useful when you're looking at doing a trade. You can check out right here. I have the deviation levels plotted here on the screen. And so if you're going in and you're picking a short, I have a short right here where I'm short and looking to buy out right around 26.25. And but anyway, so the deviation is one deviation. So that's how far I expect it to move down. And as you can see, it did move down from yesterday's settlement. It basically came right down to near that one deviation mark and then moved on back up. And now it's working on pulling back down to that deviation. But that's as far as I expect it to move. and really don't expect it to move that much further. And when I'm picking a trade, I'm usually looking for it to pull back, and then I'm looking for an entry that gives me, just the ideal entry of where the market's moving back in my direction, so where it broke the previous bar's low. So you could have got in there, or you could have got in here, in this case I got in right about around this area, or this price level, and I'm hoping for it to move on down. We'll see how the trade turns out when the day's done here, going to 4:15. And I can close the trade out anytime before expiration, or I can hold it until expiration. And if I hold it till expiration, what will happen is it'll expire out, it'll cash settle, and basically the difference between where it expires and I sold will be paid out to me. So if I put $20 up in risk and it made $80, then they'll pay me $100 out, give me my $20 risk back, plus an $80 profit. And it's a very cool way to trade. I put the trade on. I haven't really had to monitor. I've looked at it like 2 or 3 times, but I've been watching it on pins and needles. I'm not worried about getting stopped out because I can't get stopped out. And so, to show an example of this, let me pull up the actual binary I sold over here, or the spread I sold. I got a 25.50 to 26.50. And so what this is going to do is it'll make money. I pull it down. It has a lot of profit potential built in. I mean, you can just really drag this thing way down here. Because like I said, it can go all the way down to 25.50. But to try to even put this thing on the screen can be a little bit challenging because it's such a big trade. But I go in and add drawing tools, and then I go in and I can put on a rectangle. And you go, okay, well, you got here all the way down to here to about 4:15. And when I do that, then I can see, okay, so I sell the trade. I can't lose anything above 25.50. And let me see here. I'll edit this one, make it a little bit taller, drag it on up here, 25.50. All right, there we go. So I can't lose above 25.50, no matter what. And even if the market goes up, and let's say it goes to 25.55 or 25.60, 25.70, whatever, I'm still in the trade until expiration. Now I could get out if I wanted to. I'd have no reason to at this point. I'm at maximum loss. But if it comes back down before 4:15, then my trade can still profit. So it's a pretty cool trade. It's a very nice way to trade. You're not stressed out. You're not having to make that decision. Okay, oh wow, it's ticking against me. What happens if I get stopped out? Do I get back in? What do I do? How do I handle it? Just all the things that go with trading and the psychology in trading of having to worry about, okay, if I get stopped out, do I go short again? Or do I buy because I think it's going the other direction? Or do I add, do I sit on my hands and then watch it go in my direction all day long and completely miss out on the trade? So, how should I trade this? And that's why I love trading on Nadex, because you don't have to ever deal with those questions. Now it's more, where do I take my profit? And so that's where the deviation levels come in for me. They let me know, okay, how far should I expect the market to move? And so I can take profit when it gets around that area. And, but yeah, I sold it right around, let's see, 26, 31 right now. So it's up a couple points against me. Not a big deal. And my risk on the trade was very, very small. We're talking $32 a contract risk on the trade. And so, that's nothing. You can do 5 of them. You're still coming out way ahead on margin. And like I said, the market can move against me. And that'd be a 3-point move against you, knocking you out. Well, you know what? I can let the market move against me 20 points. I'm not knocked out of the trade. My risk will not go higher than $32 a contract. So if you're wanting to trade futures, or if you're already trading futures, you definitely want to check this out. It is just it's a new era in, I think, trading, and it's time for a new instrument for trading. And a little bit of a learning curve, not too bad, but once you get it, then you will love it, and you'll never want to go back. Stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, let's go ahead and check out a few other things going on in the market to sort of see where they've been moving at on a Friday afternoon. And just checking out the deviation levels across the board. So I'm going to just fly through the charts real quick and pull them up. And what I'm reading off here is, again, the diagnostic deviation levels. You get access to these for free for 2 weeks, right inside that TFNN members area where the Diagnostic Box Spread Analyzer is included. And we post all the levels for all the markets there on Nadex, all the U.S. indices, the AGs, and 5 of the currency pairs, basically all the ones that we can get reliable option data on. And so let's go ahead and check out, looking at the S&P. We can look at that right now. And we had to move down to a low on the side of, 1407.25. And we had an expectation of 1409.2. And then let me go ahead and actually change up my screen to go to 10-minute bars. If I am using minute bars, I like to use 10-minute bars. And they get rid of a lot of the chop. And so you can see, if I would have got in there, had my stop loss here, and take profit here, trade would have worked out great. So same thing, sell right here. Stop loss is up here, waiting on it to get down and see if it hits the lows again. But at 1409.2, so when it went down and it hit that level right here, then you would have been tightening your stops and would have been glad you did. But, really hasn't moved all the way down to a full 1 deviation. And you would have had to been in the trade earlier to have just a really solid trade on that. But it had basically stayed in that 0.7 deviation range. And, a little bit lower than that, but not much. We'll go ahead and go through the other ones real quick, see if the other indices are on the same pair. Apple, of course, dragging down the NASDAQ this morning. NASDAQ on the open there flew down and hit a low of 26.23. We had an expectation of 26.26. So once it hit that, then basically you're expecting a reversal and tightening your stops. And so if you were short earlier in the morning, then that would have been a great profit target for you, 26.23. And actually 26.26 would have been a great profit target. So if it went a bit lower, that's awesome. And so if you're still short on NASDAQ, then you're looking for, again, 26.26 to be that first major take profit zone. And then looking on over, checking out a couple others, we got the Wall Street 30, so we'll go ahead and look at that, or also known as the Dow. And let's check this out. It went down to a low side of 13.075, and 13.075, we expected it to go down to 13.104, and then to 13.083, and then eventually to 13.052. Didn't hit 13.052 yet, but it did definitely hit the 13.083 right here. That's 0.7 deviation level. So if you're tightening your stops, you've been out of your trade right now. And if you are going short again on the Wall Street 30, again, your target is first 13.083, and not only 10 ticks away from that, and then on down to potential 13.052 if it does actually go to that. There's basically a 68% chance it'll stay inside that range. And then looking on over and checking out the Russell. So on the Russell, we had some moves up and some moves down. But on the side down there, we went down to a low of 817.4. That's exactly half a deviation to the tick. And then moved on back up to a high of 824.9. And really, that isn't anything. That's just some oscillation off to the close. That doesn't, didn't even hit a deviation level in and of itself right there. And then, but basically a half deviation exactly, 0.7 on the other two. And then the one thing moving down the NASDAQ with Apple pushing it on down. And then looking on over at natural gas, hitting a fresh low for the week here, got 3.261, and we expected it to move down to first 3.294. Obviously, it hit that. Then on down to 3.273. We hit that right here, so got that number hit here again, and then again right here. And then the next target would be 3.241. Obviously, we're not hitting that. It hit that 0.7 deviation level. And if you tighten your stops, you'd be glad. You'd be looking for a potential reversal or a straddle. Or you're just down and out for the day, and it flew on back up, and it's basically filled in the gap, just a few ticks away from filling that gap in from yesterday's close on the pit close. And then looking on over, checking out oil, got a WTI right there on CL, and it looks like we moved on up to a high overnight of 86.92, and that would have taken us just past the 0.5 deviation level of 86.72, and during the market hours here, we actually had 86.76. And so it fell down, filled almost all back down, basically went down a half deviation, but it pulled back up to the half deviation mark. And it's just sort of been oscillating at that point ever since. So not a whole lot going on oil at the moment. And then checking out gold. What we got going on gold right here? Gold moved on down to a low of 1694. And we expected it to drop down to at least 1690. And it didn't even do that. On the high side, it went on up to 1701.9. Not even in a half deviation, gold being really, really flat today. And we'll probably see some more movement on gold as the reality of the fiscal crisis unfolds. So look for that in the coming weeks. We got silver, and it did make a bit of a move there. It moved on up to a high of 32.79.5 overnight. And we expected it to get up to 32.60, then 32.70 even, and then up to 32.84. Didn't hit the full deviation, but it did hit a 0.7 deviation, 32.70. And you can see right when it hit that, it basically just oscillated right at that level for quite a bit of time, and then it pulled on back and basically, a little bit more than filled in the close at to a low of 32.25. And 32.25 wouldn't even have been a half deviation move back down, but it had a solid move up before retracing at day's end. And checking out the copper markets on copper, we got it moving. And let's see here. Let's check it out. It had a nice big move overnight. We had to move on up early in the morning up to 3.6945. And copper, we expected to move up to 3.699. Would have been a full deviation. Almost got there. Just a few ticks away. 3.686 would have been a 0.7. So right when it hit over here, 3.866. There we go. And we can see it definitely did level off that 0.7. Tried to push for that full deviation before just giving it up for the day. And rolling on down, checking out our ags. So looking on over at corn. Corn decided to finally go ahead and make a move. And corn right now is up to 730.75. And that would actually be a perfect deviation move. 730.7 is a one deviation move. So we can pull that right here on the deviation charts. And you can see corn right there, 730.7, being a 1 deviation move. And basically, as soon as it hit that, it fell on right back down, just flattened out going into the end of the day. So just a great trade on corn right there. Good, long, solid trade, and perfect mark right there hit. And then looking on over at soybeans. So soybeans, we also had a nice little rally going on into the day there. We hit a high early this morning of 14.97, then went pretty flat. Well, on soybeans, we were looking for a move up to, let's see here, you got soybeans on a high of 14.97, let's say 0.5, or just 14, high of 14.97 even. And 14.97 right there, that would have been a move up just past the 1 deviation level at 14.92.5. So just went a little bit past that, and now it's actually just sort of hanging out right around that 1 deviation mark. Really isn't moving much further. Again, we don't expect the markets to move more than a deviation in a given day. And that lets you know, hey, you know what, rally's over. Don't be buying right when you're close to that 1 deviation. You can be tightening stops. You can be taking profits. You can be looking for reversals or straddles. But, don't be looking to add on to positions when you've already moved the majority of the move that is expected in any given day. And then very, very helpful, because once you master your risk management with something like Nadex, then you got to master your profit management. Rolling on over here, we can see a few things happening. Looking at the euro dollar, I want to pull back up just the news reports for the day. And like I said, we did have that CPI number come out this morning at 7:30, came in at 0.1%. So when that number was finally released, right over here, let's see here what we're on Eastern. We got to go over to, if it came out at 8:30, that would have been 7:30 Central Time. So there we go, 7:30. As soon as that number is released, then the dollar basically gets weaker against the euro. So bad news for the dollar. Good news in a sense for the market, but making things cheaper. But bad news for the dollar, making it weaker against the euro, giving the euro strength, quite a bit of strength. Like I said, I move all the way up to 1.3172, and we expected to move up to 1.3140, and it actually moved like a lot of the currency pairs did today. It actually broke the deviation levels. We went up to 1.3171. Was the actual 1.5 deviation. So, I mean, you're talking 1 pip, literally just 1 pip off of 1.5 deviation marks. And as it hits each deviation level, you're tightening your stops. So if we go in and look at that, you've been tightening it up when it hit the 1.3140 mark right here. And then when it hit the 1.317 mark, you want to tighten it up again. And then, it's just flat now that it's that 1.5 deviation. Really should not expect any further rally in the euro dollar at this point. If anything, maybe a drop down or probably just flat. Considering that we're so late in the day on a Friday afternoon. And then looking on over pound dollar, basically got the exact same reaction. It took it a little bit longer to come around, but it finally did. When it did, it launched on up to a high of 1.6176. And the pound dollar, that 1.6176, almost a half deviation. You're talking just 4 pips away, but 1.6158 was our profit target, and it did hit 1.6158. So you're tightening your stops, move on up, tighten your stop again, and as you can see, it's just went flat. At this point, if I was long on pound dollar, I'd probably just be closing out my trade and being thankful that I caught a full deviation and then some in a single day. Looking on over, checking out the USD yen. On the USD yen, and looking at this, move up to 83.95. Again, that's 83.95. That had been 0.7. 83.91 was a 0.7 deviation, so 83.95, just 4 ticks off, basically above that level. And so as soon as it hit that, let's see, did it hit it here? What do we got? We got a high 83.91. So right here it hits it. You tighten your stops up. You get stopped out. You're glad you did. This is if you're trading last night. And Aussie dollar and yen trades are usually great to trade. And then for nighttime traders, so those are the ones going to move right around those reports when they come out. And then it pulls on back down. We could actually move all the way down to a low of 83.31. And 83.31 actually would have pulled you down to a 0.7 deviation move on the downside. So we would have had another take, basically to tighten your stop. So here you tighten your stop up, you can already get knocked out. So if you went long, and if you did go short at any point, maybe you waited till this happened, or maybe you waited for the second round, whatever, or maybe just waited for the trend line to turn around. Well, on that trend line, we did see that move down, so this would have been a great short. That would have been your profit target. You tighten your stop, and you captured a decent amount of pips right there, good 30 pip trade. And looking on over at the U.S. franc. On the U.S. franc, what we got here, if it ever loads. So waiting on it to come on up. But let's try one more time. USD CHF. There we go. All right. So U.S. franc comes on down 0.9166. And nice big move on that trade. I went short on it at 11 o'clock. I did a couple different trades at the same time. One of them did not get filled. A couple others did get filled. And I actually did some binaries on that, and they did rather well. And looking at the U.S. franc, we got a low right now of 0.9166, and that, like I said, is a massive move. It actually broke 2 deviations. So a 1 deviation move was 0.9208. And so you can see right as we hit that 0.9208, then you'd be tightening your stops if you're short, and but you would not have got stopped out. And so it just oscillated right there and then kept on moving and dropped a whole nother deviation. 0.9178 was the next deviation level right here. And so when that happened, you want to be tightening your stops, tightening them again. You're probably still in the trade if you're short. Would not be expecting any further decline in the U.S. franc. But definitely just a killer trade right there, and just a great movement to be able to get that kind of gain on the U.S. franc. So you don't see that very consistently to see that big of a move. And then looking on over and checking out U.S. Canadian. So we got U.S. Canadian pulling on up. And that first, just trying to figure out what it wanted to do, it dropped on down to a low side of 0.9831. And that would have pulled you down to a full 1 deviation move on the way down. We had 0.9834, really low volatility built in today. And but it did pull down, hit that 1 deviation perfectly. And so you tighten your stops. Maybe you do a reversal, a straddle, whatever you want to do. If you go back to the long side, it moved on back up for you straddled, moved on up to 0.9864. And that would have taken you up almost to a 1 deviation. I mean, we're talking 2 pips away. 0.9861, you'd have been tightening your stops. Maybe you're waiting for the exact level at 0.9866. But 9861, you definitely tightened your stops here. And you could have tightened them one more time if you wanted to. And you would have been glad again because it gave it back. And now it's just sort of flat and not doing a whole lot. Not a whole lot left expected in the U.S. Canadian. And really now just waiting to see how Nasdaq's going to end up. Is it going to end up pushing down strong for the end of the day, or is it going to just go flat? So we'll see. We got a couple more hours left here in the trading day, and a lot of that's going to do based on just how Apple decides to play it out for the rest of the day. It got plummeted pretty hard overnight, and but it did see this little weird spike out of nowhere. I think pops up $5 and comes on back down. So I'm sure some people are not real happy about that at all, and that's pretty rough. So this is why, if you're going to trade Apple, trade Nasdaq. It's a good chunk. And hop on over, look at the U.S. Tech 100. It incorporates a massive chunk of Apple, and they flew up there. What does that mean? Well, that means it went up, and there really were just a few orders. They snagged them. And, I mean, it wasn't like that spike right there. It wasn't a massive volume spike. And they snagged them and gave it all back up. There really wasn't anything for it to keep going with, and so it came on back down. But we'll see how it ends up at the end of the day. So where it goes, but Apple just really getting hit hard after the lawsuits and everything else. And at the end of the day, all you got to do is follow the chart. So, you watch the news, you don't watch the news, great, whatever. But follow the charts. And news, can let you know the why, but it's always after the fact. The chart is in the minute. It's what's happening. This is real time. And everything that's happening in the news is inside these bars. Okay? Everything is inside these bars. So you don't need to have, your eye glued to a TV. It's good to have, it on. Maybe you can read the subtitles, whatever, to sort of keep you in the know. You can go back and read the reports for the day to see what happened and why it happened. But at the end of the day, you got to watch the chart, the orders, the price action, the volume. That's where it's at. And I like news to let me know why something happens, or I like news more than anything to let me know when something's going to happen. Like, when is earnings going to be announced? Not so much what is the announcement, but when is it going to be announced? So that way you can plan your trades around it. When is the CPI, the unemployment, non-farm payrolls? Let you plan your trades around it, let you know when to tighten your stops. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. Just checking things out, seeing where things are moving. And about to be wrapping up for the day here, so we'll see how the market's going. But we got Nasdaq really oscillating right now between this 0.5 and negative 0.5 and negative 0.7 deviation level, and hoping it'll just break out. We have a nice little trade there. We'll see what happens. A very small risk. And so we put that on earlier in the morning. We were talking about that on the Bull Bear Binary Hour. And anyway, so we talked about everything that's coming up. The last day we got was a fiscal cliff. Republicans are basically like, hey, we're on call. You want to do something? Let us know. Boehner went ahead and he's like, I'm going home, but I'll be here in 5 seconds if you need me. And just don't know how it's going to turn out. Everybody's like, no, surely they'll solve it. But they don't seem to be solving much of anything right now. And so obviously it's going to be tough. But, hopefully our politicians can get their act together. And one side or the other. And just make something happen. And it'll be interesting to find out. just how the healthcare comes together. I saw a big report come out about how the medical stuff's coming in. And there's a whole lot of layoffs coming in the medical industry right now. There's a lot of doctors right now that are actually having to quit their private practice. My aunt's actually an OB-GYN, and she very small town that she works in, but and she's one of the few OB-GYNs out there. They're going to close the private practice because without the Medicare supplement that they've been able to use that got them through, the election, right? That's disappearing, and with that drop in price, they actually can't even afford to operate the practice. It's net negative. So it's going to be this, it's going to be very interesting to see, how this affects everybody. And but yeah, we got some weird action happening over in Apple, and it makes me wonder if it's my charts, but I don't think it is. We got these like $5 spikes popping over and over again. Look at this right there, and then another one again. I'm gonna open this up over on my other panel just to see what happens, because I just have not seen this happen too many times, and where you just see it like happening again and again. We got some people getting some major stop outs happening right now, and a bit painful. So if you want to verify the Tigers, then you're seeing the same thing. But again, over and over again. Let's see here. Let me just do a very basic chart format and see how this looks. Yeah, it's happening over there too. Really, I mean, I can see that stuff happening, later. But we had it. I guess we had it yesterday too. You can check it out right there. We had it happening later in the end of the day. But I mean, this is right in the. We still got some time left on the session. And look at these things. I mean, we're talking like a move from 809 or wait, not 8. They wish. 509 up to 514, and then right there, 510 up to 514. So, yeah, just some crazy actions, just 4-point swings right there. Anyways, be careful. If you're short, man, you had any kind of stop loss, you probably just got stopped out. And if you're ever on Nadex, it's not happening to you. You're short. I've been short on Nasdaq. I'm not worried about it. But there's some really interesting things going in. Just a bunch of orders just flying off. So I don't know if that's a sign that it's about to crash down, or if it's just a bad tick. But it have to be on the exchange. I just pulled it on 2 different platforms, and both of them showing the same information. So I don't know if the exchange has to clean up their ticks, or if there was a weird trade. I'd have to go back and look at time and sells and see what's going on. But anyway, but yeah, some really odd just to see that twice in a row. And again, that's Ninja Trader, that's right here on the left, and Trade Station on the right. So very, very, like I said, odd things to see that happen. But anyways, so hopefully that didn't trigger anything that it wasn't supposed to trigger for you. But my guess is we're going to see it move on down into the end of the day and close out Friday pretty far down. I wouldn't want to be long Apple into the weekend right now based on everything that's been going on. So I'm sure I'm not the only one. And, of course, I'm hoping so because I'm short the Nasdaq right now. But anyways, I hope you all have a great day. Have a great weekend. Relax, enjoy, recoup, and get ready for another week. We're going to have some quiet news next week, but still have some good and great trading opportunities. Keep tuned right here with some great shows coming up for you on TFNN, and make sure to check out that Tiger Dollar Holiday Special. All right, we'll be right back right after this commercial break with another show for you.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.